right. And, talking about the Nairobi Securities Exchange, there's a lot of things that we do not know, a lot of financial literacy that we need. And, talking about financial literacy, not much is known about why we even need to invest in the Nairobi Securities Exchange or even in stocks for that matter. So joining us now is the investment manager at Citon Investments. That is Maurice Odor. Thank you so much for joining us. Earlier, I asked why people need to invest in stocks, but let's start with financial literacy. Are we doing enough to educate ourselves or educate young Kenyans on financial literacy?
I think we are trying, but a lot more remains to be done. If you look at even one of the pillars of Vision 2030, especially the economic pillar, is about ensuring that we have a saving culture. And once we have a saving culture, the next thing now is to move these savings to investments. And one of the investment avenue through buying shares in a stock exchange or even in a listed segment of the market. Yeah.
All right. And so, what we are seeing at the Nairobi Securities Exchange have been numbers or figures that have been described as not so good, especially for the month of January. But tell us why exactly we should even invest in these stocks at the NSE.
If you look at the stock market currently, especially the local securities exchange, where we are, the market is trading at a price to earnings of about 9.5 times.
Yeah.
Price to earnings simply means the unit, what amount you are paying for each one unit of earning that you are buying in a company. Historically, the market has been trading at an average of 13.5, 13.7 times. So if you look at for market to go back to that historical average, we are looking at an undervaluation of 40%. There's a potential upside of 40% that investors stand to gain from this. This might be realized. It can be short term, it can be long term, but stock market, especially the shares, which will reward long-term investors.
All right. So rewarding long-term investors, that is a flat way to analyze the NSC, that, the people who benefit the most are those who invest in the long term?
If you look at, let's take example, for example, Safaricom, when IPO was done in 2002, around 2007, 2008,
Yes.
it was at 5 shillings. Around 2011, Safaricom traded at a low of 1 shilling and 95 cents. Last year, we saw Safaricom trading at 24 shillings. So a person who got in less at even 5 shillings, hold for the last 6 years to 24 shillings, almost more than 400% return. If you look at people who panicked along the way, they sold at even 1 shilling and 5 cents, they made losses. So these are good testimony that stock market usually shares reward long-term investors.
All right, so let's talk about the 20-share index. And maybe there's some people who are even finding it hard to know what the NSC means. But let's talk about the 20-share index and the fact that for the last 30 days, it has been going down, save for the last 2 to 3 days where we've seen it starting to rise again. But what are the reasons as to why it has been dwindling over the last 30 days?
If you look at how stock market work, they're usually those metrics that use to track the market performance, and one of them in the local securities exchange is called an AC 20 share index. The word 20 stands for the number of companies that are used to compute that index. What happened, they take 20 companies that they consider to be blue chip, fundamentally strong, well-run companies. Then now they track the performance of these companies on a daily basis to inform how the market is performing. What we've seen, especially for the month of January, we've seen most large cap stocks, most fundamentally run fundamentally run companies that now constitute an AC 20 are now that's recording price declines, and now these are reflecting in the Nairobi Securities Exchange. That's why we are seeing that the NSE 20 performing that bad. But if you compare NSE 20 with other indices, then there's a calculation methodology for NSE 20 that makes its performance be that bad, even if compared to other local indices in the market.
All right, so let's compare the NSE 20 share index, say, to the Rwanda Stock Exchange and the Uganda Stock Exchange, and maybe Johannesburg Securities Exchange. How are we performing on that front? Can you say we are still the worst performing
if you look at for
securities?
a year-to-date basis, we are the worst performing stock market regional, and even if you look at Africa in totality, and partly because if you look at this, Kenya stock market is largely driven by foreign investors. What has happened in the global environment, global investment environment, we've seen a more sort of like increased risk profile for emerging markets, Kenya included. If you look at countries like Nigeria, they are going through a lot of issues. Look at again Kenya, we are in an electioneering period. Again, most foreign investors will adopt like a wait and see strategy so that we clear all the politics. Then now they'll come when things are more clear and investment environment are more certain as compared to where we are currently.
All right. So as you see the trading wall over here, you can almost see the numbers changing by the minute. But which are the prime stocks to invest in at the moment?
If you look at the securities now, most stocks, especially financial services companies led by mostly banks, though they're expecting that banks are going to record more reduced profit growth because of the interest rate cap that was affected last year. But if you look at for long-term investors, financial services are very cheap. Banks are trading at a price to book of 0.8 times. Historically, when we started 2016, they were trading at 1.6. We're seeing like a drop of like almost 50%, which, as I said, we are starting. This present a very attractive, and such opportunities are very rare to get in an investment environment. So
Right.
financial stocks, those ones I can buy anytime.
Anytime.
Yeah.
What about the energy sector? Do you
Look at
think they
energy
are
sector.
that attractive?
Look at energy sector. Also, there are still attractive opportunities in the other sectors in the market. But the reason why I'm more biased toward financial services are usually reflect the performance of the economy very fast. When the economy recovers, they're usually one of the sectors that now reflect that immediately.
All
And
right.
again, that one reflects in the return to the
So the last 2
investors.
days we have seen the 20 share index starting to go up, which is probably a good sign. But are we going to see better news that it's going to go way above the 3,000 point psychological mark? Because we've seen it hit 4,000, which was a good place that we were at. But are we going to see that happen anytime soon?
I think the performance of the local market will remain subdued for quite some times, especially till we are over with the elections. Because if you look at what happened now, the reason that now seeing some sort of positive performance in the NSE 20,
Yeah.
a number of large cap stock, look at stock like KCB, Equity Bank, Safaricom, all of them always on a downward trend. But what we see in the beginning of this week, they're sort of like reached a resistant level. Now we are seeing some upwards in terms of the price movement.
Right.
This will now reflect on the performance of the NSE 20. But going forward, if you look at now, the wait and see situation is still there. A lot of uncertainty still remains that are likely to result in the subdued activity in the local exchange.
Okay.
We are likely to see more reduced performance, more subdued environment till we are done with the elections.
Wow. All right. So it seems like we are in for it up until after the elections. And speaking of the effects of elections, there are certain factors that, of course, are likely to affect us. And one that is of great concern, at least to the regulator, that is the Central Bank of Kenya, is the Trump effect. And we are now living in uncertain times where we do not know how the U.S. economic policy is going to affect us. The CBK governor says this is the most worrying concern for the Central Bank of Kenya, or at least the